Yahoo Finance's Josh Schafer is here to help us break it all down. And Josh, let's start with the first one, and that's Roku. That's closing the day up. Shares moving to the upside of 31%, rallying on better than expected earnings results here from the company. And Josh, I think there was lots of questions going into this report about whether or not Roku was going to hold up given all the macro pressures, questions about the ad market, exactly what that is going to do to Roku. But again, beating the street's expectations here. And investors seem to be pretty excited about this.
Yeah, Sean, it really comes down to just a couple simple numbers here, right? When you look at Roku, what they did in the first quarter versus what they did in the second quarter. So first quarter ad revenue was down 1% year over year. So it was down compared to the year prior. Fast forward to this quarter, the quarter they just reported for, Roku's ad revenue was up 11% year over year. That's just a massive jump, and a jump that I don't think people were fully expecting because, as you said, people have not felt that good about the ad market. There still is questions about the health of the ad market, but it is some positive signs. And one other note that I wanted to highlight there is just getting costs down. Their operation costs down 8% here. It had been up 42% year over year in the prior quarter. So just to be able to manage costs seems like a key thing that investors are focused on here. Again, people still wondering how that macro backdrop is going to affect Roku in the second half of the year, but maybe once those sort of storm clouds clear a little bit, might be better.
Yeah, we know getting costs under control, huge focal point here for investors, especially what we're seeing play out within this sector. A couple of other data points here that stuck out to me in this earnings report. Active customer accounts, that was up 16% on a year-over-year basis at 73.5 million. Streaming hours up 21% from a year ago at 25.1 billion. Average revenue per user, though, that was off nearly 8% on a year-over-year basis. So some cause for concern there, at least for Roku.
And then I want to take a look at the energy giants, too. Exxon and Chevron falling today. Exxon missing the street's expectations in Q2 profits, with profits declining 56% since last year. Now, Chevron posted a loss earlier this week, a 48% drop in earnings, down from a year ago, but it did beat the street's expectations. The two oil giants losing a combined $15.5 billion in profits since last year, Seana.
Yeah, certainly. Some worrisome trends here for Exxon, and we're seeing that pressure on the stock off just about 1%. Their CEO, Darren Woods, trying to put a positive spin on this call, saying that it was nearly twice when it comes to their earnings work right now, nearly twice what they made in the second quarter of 2018. That doubling of earnings reflects our work in the intervening years to reshape our portfolio of businesses, invest in advanced products, also drive a higher level of efficiency and effectiveness. Lots of focus when it comes to Exxon and their presence within the Permian Basin. They also announced record production efforts in that region. It's on track here for overall growth of about 10% this year, but clearly they have been under pressure as we've seen the price of crude under pressure below $80 a barrel. Certainly a headwind here for these larger oil giants.
Right, and I thought it was interesting too, you mentioned Chevron sort of pointing out some positives in the quarter still. I mean, the stock wasn't down that much, right? We're not talking about a massive loss here. And I thought their CFO had an interesting comment to Reuters, also pointing out that if you look at just earnings and profits, they haven't had this good of a quarter. If you took out the second quarter last year, it's their best second quarter since 2011. So really, probably, maybe they're not that disappointed in the quarter.
Yeah, and they're up against very, very tough comps. Exactly. And we're comparing it to what we heard from Exxon back in 2022. All right, let's also take a look at Intel ending the day higher. The company's latest earnings results really a gain of just over 6%, one of the top performers in the Dow. Well, Intel showing some signs that it did return to profitability after 2 straight quarters of losses. CEO Pat Gelsinger attributing the boost to a recovery in PC sales. He also said that the AI boom could potentially help drive sales even higher from here. Clearly, Intel has really struggled with the slowing growth, or really the slowdown that we've seen across the board when it comes to the PC market. So this report really pointed to the fact that maybe the PC market had bottomed in the second quarter, and we're looking for that recovery to hopefully, at least in Gelsinger's eyes, he is very confident that's going to pick up some steam here in the second.
That's the key word here, right, is bottom, right? That's a lot of times what you're looking for in these different calls, depending on what the metric was that was falling, is people want to find that bottom because then it means things are probably going to go up, right? So Intel highlighting that PC inventory correction has likely ended and they're going to come into a positive period there. Also, I thought it was interesting, again, talking about OpEx and just savings. They're talking a lot about being able to save over the next couple of years and fixing that cost structure, which is something that people have been very focused on too.
Yeah, they've been very focused on. It certainly seems like the street was encouraged by these results, although some still a bit hesitant. Oppenheimer was out with a note just commenting on these results, saying that they are going to remain on the sidelines as the company's turnaround plans play out. So they're encouraged by the results that they did see this latest quarter, but they also want to see what the numbers look like for the current quarter. And then, of course, as we look ahead to the end of the year. All right, well, we are halfway through the second quarter of earnings. Let's check in on some of the biggest winners and losers so far. Josh, we got to start off with what we've seen play out in the tech sector so far. And two of the names that stuck out to both of us this week was Meta and Snap. And what we heard from these two names was an extremely different story. Where do you want to start with?
Meta.
Okay, go for it. On a positive note.
It's Friday. It's Friday, the market's up. Let's talk about positive things first, right? I don't know, Meta, it really stuck out to me. You could really look at these stories in a similar vein in terms of ad market, right? Yeah. When you think about the fact that Meta says the ad market's doing well, Snapchat's still saying the ad market isn't doing well. Well, maybe one company's just better at providing ads to people on their social media, right? But I thought it was interesting too, when you think about Meta and what happened with this quarter, to see this stock rally again on earnings, and really not because of the metaverse was one thing that really stuck out to me. We're still not talking about the metaverse.
Although Zuckerberg in the earnings call did say he's very committed, but yes,
because people are asking about how much they're spending on it, and that's still a long-term concern. But now they're talking about AI, right? AI is what is driving this. I brought with us one quote from the call that says it all. Okay. So I'll read this from Meta founder Mark Zuckerberg. He said that investments that we've made over the years in AI, including the billions of dollars we've spent on AI infrastructure, are clearly paying off across our ranking and recommendation systems and improving engagement and monetization. He specifically said later in the call, he thinks AI is contributing to about 7% more time spent on these apps. Of course, then you can make more money with ads, right? So AI actually helping a company make money.
Yeah, exactly. And that is what investors wanted to hear, was questions about how long we would have to wait in order for these companies to start showing how AI is boosting their bottom lines. And to that point, CFO Susan Li also telling analysts on the earnings call that AI helped advertisers better measure the performance of their ads. And Zuckerberg was saying that they had users spending more time on the platform. Advertisers were spending more money on the platform, given the fact that they had a better gauge of the performance of their ads. So certainly AI contributing to Meta's very impressive quarter. When you take a look at that ad revenue, $31.5 billion, that beat the street's expectations. Now let's compare it to what we heard from Snap, because a totally different story. Their weakness in their advertising business. We know they're investing a lot in their AI tools and what they see as the future, which certainly did pressure profitability, at least in this quarter. But I think just when you take a step back, the story hasn't really changed. Snap continues to struggle against the larger players within this space. They're going up against Meta. They're going up against Google, Alphabet. And they have shown, at least over the last several quarters, that they're lagging pretty far behind, and they're struggling to even just remotely stay in the race.
I mean, we're showing it on the screen right now. We just were with the earnings. If you're not a profitable company and your revenue is shrinking, your stock is going to react like this when you announce earnings, right? They just need to find a way to reinvigorate revenue growth. And right now they don't have that answer. And that's clearly what's weighing on shares. It's the second straight quarter that they've seen a revenue decline. They don't really have another product outside of Snap itself. Maybe the AI chatbot helps it and brings in new customers, but you're sort of just wondering how they build more monetization here. And that path just doesn't look clear right now.
Yeah, it doesn't look clear. A bit of good news, though, because we don't want to rain all over everyone's parade. There's some things to get excited about when it comes to Snap. More time spent on its Spotlight videos. They did have stable daily active user growth. It could signal maybe a recovery ahead. Certainly some trends that you would want to see in terms of potential future growth. But we'll see what happens there.
You're more positive than me.
I'm more positive. I don't know. I'm trying to find the silver lining here. All right, let's talk about some of the reads on the consumer that we got this week. Josh, we heard from Royal Caribbean. We heard from Southwest. And like it was with Meta and Snap, two very different stories here. Let's start on the upbeat note when it comes to Royal Caribbean, because this was just a blockbuster quarter here for the company. The shares, as a result of this, shares hitting the highest level that we've seen since pre-pandemic. CEO Jason Liberty coming out saying that the demand right now is just exceptional, and there's no sign of it slowing down anytime soon.
This is one of the clearest examples, I think, that we have of the overall conversation about the consumer, that people want to spend on experiences and continue to spend on services, right? It's really playing out in the cruise lines, in multiple different cruise lines earnings. You take a look at those stocks throughout this year, they're all rallying at pretty much insane levels at this point. It's been very impressive, but that's been the run, that's been the conversation, and it's really just not surprising to see it come out in the earnings. On the other side, Southwest is dealing with a little bit of something different when it comes to demand, right? They have that demand for people to travel. You probably get on a flight before you go on your cruise. But it was interesting what they highlighted about business demand.
Yeah.
And so the quote I want to bring up there, the quote from the call that says it all, Seana, from CEO Bob Jordan, he said it's clear that travel patterns post-pandemic are not what they were pre-pandemic. Some of that is leisure, a lot of that is business. I expect business to continue to come back, but I think it's going to trail the restoration of leisure here for a while. So when does it come back, I think, is the biggest question looming over Southwest.
Yeah, that is a huge question. We've talked to a number of analysts. Savi Seth was one of the analysts that we spoke to earlier this week, just talking about the rebound that some airlines are seeing from their business travel customers. Southwest obviously lagging behind. That's pressuring the company here. And as a result, they're revamping their flight schedules for next year to reflect some of those post-pandemic changes that they are seeing from their customers in regards to their travel patterns here. So contrasting, a huge contrast to what we've heard from so many of their competitors out there in the space. When you take a look at United, American Airlines, clearly in a better position there than Southwest. All right, Josh, this was fun. You got to come back another time to break it all down.
There'll be more earnings next week.
They always are, at least for now.